Focus. Ideate. Innovate. Enable. CNBC TV18 and HDFC ERGO present Digital India, Surakshit India, powered by CNBC Awaaz.
Hello and welcome to this special show. CNBC TV18 and HDFC ERGO present Digital India, Surakshit India, powered by CNBC Awaaz. My name is Yash Jain, and today on the show, we are joined by someone who hails from a sector which will play an important role towards the journey, and that is towards Digital India. We have with us Ritesh Kumar, MD and CEO, HDFC ERGO General Insurance. So thank you so much for speaking to us today on this very important topic of Digital India and how does the insurance sector play an important role. I would start from the very beginning. Your partnership with ERGO, that happened about 14 years ago. When these two partners came together, large players in their respective economies, what was the rationale behind coming together? What was the plan in terms of achieving when it comes to these companies coming together?
The insurance sector opened about 20 years back at the turn of the millennium. Till that point in time, insurance was largely with the public sector companies. Of course, we had seen private sector come in banking, in mortgage lending, and as you know, HDFC sort of at that point in time when the sector opened up was a very large player on the banking side as well as on the mortgage lending side. HDFC at that point in time, in their wisdom, felt that when they are entering insurance, they would need the domain knowledge of insurers, and this is what made them look outside for partners. In ERGO, which is part of the Munich Re group, Munich Re has been in insurance and reinsurance for us since 1880. So about 145 years. They are amongst the largest reinsurers in the world. A lot of the policy wordings that we use in India are those which are given by Munich Re and the likes of Swiss Re to the Indian market. And that is how in 2008 this partnership came about.
How has the journey been so far for HDFC ERGO as a company, as an important stakeholder in the Indian insurance sector? And do you somewhere today feel that right now, the next 20 years is going to be a completely different story, in fact, a sequel to what has happened in the previous 20 years?
20 years back, the insurance penetration, and I'm confining myself to the non-life sector, was about 0.5% to the GDP. Okay, we know that the global averages are around 4%. The Asia Pac averages are about 2%. What we've done as an industry over the last 20 years is that from a level wherein we were about a 10,000 crore industry, we are today a 2,20,000 crore industry as of last year. We should ideally close at a level of about 260,000 crores. More importantly, we are today 1% of the GDP. Our country ranking was about 28th 20 years back. We are today the 14th largest non-life insurer. So as a sector, this is something we've actually been able to move forward. We've actually been able to grow at a 16% CAGR through these past 22 years. And to sort of bring us to this point in time, the industry dynamics has also changed through these years. Today, the private sector contributes about 60% of the premiums.
Correct.
When I look forward and say, we've now been in the private sector for 20 years, and if I was to just do some crystal ball gazing of what happens in the next 10 years, this industry should nearly be about a 10 lakh crore industry in 10 years from now, about 1.5% to the GDP. Our country ranking, depending on how the other countries do, should be somewhere around 6th to 7th. So one thing which is very, very clearly there is that, a lot of people really don't know about our industry, other than the fact that, they need a motor insurance or they need their health to be insured.
Correct.
But a lot of people understand about the economy per se. Now, if we essentially look at it, the nominal GDP growth rate of the country has been about 12% through the last 20 years. Our industry has grown at 16%. So in a manner of speaking, we've grown at about 400 basis points over and above the nominal GDP growth rate of the country. And this is also true if we were to look at the last 10 years or the last 5 years. Now, if we sort of essentially believe that as an economy, we will continue to grow at these rates or higher, and I'm talking of the nominal GDP growth rate, the real growth plus the inflation. Then the next extension is very, very logical, that as an industry we would be able to grow.
Okay.
And I'm still not talking in terms of all the tailwinds with all the regulatory sort of support sort of which is coming to grow the industry to the next level.
But for you, HDFC ERGO has been one company which has been quite actively been present in inorganic growth route. You acquired L&T General Insurance. You also merged Apollo Munich Health Insurance into the company. So you've been looking at that side of business also. How has the inorganic route helped you so far in your journey to achieve your personal or the company's growth targets? And what lies ahead as far as, conversion of these transactions is concerned?
We are the only company today across life and non-life which has had the privilege of having 2 acquisitions. Whenever any entity across any sector does an acquisition, there is really, there has to be a strategic objective or a white space which is being addressed.
Correct.
Our case was no different. So, when we acquired L&T sort of way back in 2016, at that stage, our thought process was that we were actually sort of, while we had done our bit on the bank assurance side, and we had also been able to scale up our corporate book, but on OEMs, we really did not have too many relationships.
Correct.
Though L&T was very, very small, they had actually been able to get some relationships. And so that was the white space that we addressed. Today when I fast forward, we actually work with OEMs which account for about 90% of the private car market and about 85% of the two-wheeler market. So that was the relevance of the L&T transaction. When I moved to the Apollo Munich transaction, which we announced in 2019, and the company was acquired in Jan of 2020.
Correct.
We were a player on the health side, but it is our view that health insurance has a very, very significant role to play as we move forward, given the fact that we all sort of talk of what is known as the missing middle, wherein we say that about 50 crore Indians still don't have a health insurance policy. And this was one space that we wanted to consolidate. And in 2020, we acquired Apollo. And what that has essentially meant is that today, collectively, we have a 10% of the retail health insurance market. And we are one of the one of the larger players on this side, the second largest in the industry, frankly. And the second thing that it helped us address was that get a strong footprint on the agency side.
Correct.
So today more than 20% of our premiums come from the agency channel. So, any acquisition has to address some white spaces. And there were some white spaces that were addressed. And I'm, happy to say that we were actually able to use them to properly scale up our business today, which essentially means that our business is a very, very diversified business today across channels and across the product segments.
In your experience, to any company, to your company, does an omni-channel distribution platform always help, or focusing on one channel is more beneficial to the company?
I think it would be a fair statement to say that we are a channel agnostic company. I want to be at every place that my customer wishes to be. I cannot determine where the customer wants to be. It is his or her choice. But I want to be where they are. Now, there is this whole phenomenon. We would have heard of things like ROPO, which is research offline, purchase online.
Correct.
Or vice versa.
Or vice versa.
Okay, so which basically means that I need to be present across channels. Today we are present across broking, we are present across the direct channels, we are present across agency, we are present across banker, and therefore this enables us to be able to service our customers on a 24/7 basis. They can buy a policy on that basis. But whatever channel or whatever mode that they choose to go to, we've tried to ensure that we've got a presence there.
You've since you started functioning in the industry, you've achieved some important milestones, about 6.1% market share in this huge industry, about 2.5 crore customers today. What would be those 2 or 3 pillars that you can really place this success story on?
I think first and foremost, a very, very strong promoter backing. In HDFC, we have someone who's not only financially very, very strong, but a group which understands the Indian consumer psyche. Our customers would be aware of the fact that as a group we sort of literally service we have about 8.5 crore customers, which practically means that every fourth family in the country sort of is a HDFC customer. I mean, I spoke earlier in terms of the strength of the Munich Re Group, the largest reinsurers sort of in the world. So the promoter strength, both the financial as well as the technical capability or the market understanding is first. Second, we've been fortunate to get a lot of support from our channel partners, a lot of support from the large corporate customers. I mean, we've sort of had support from our reinsurers. And of course, last but very, very importantly, we've been fortunate to have an excellent workforce. I mean, we've got a 10,000 strong workforce.
Correct.
And in a service industry, it's a people's industry. I mean, the quality of your manpower, I mean, makes or break the things. I mean, we've been fortunate in having not only a very, very competent team of leaders, but a very, very dedicated workforce across our 207 branches and another 429 sort of digital offices across the country.
Correct. I mean, it's great to hear how these things that you mentioned have come together to take you to a place where you are today. But on that note, it's time for us to take a very, very short break. But stay tuned as we continue this interesting discussion on the other side of this very short break.
CNBC TV 18 and HDFC ERGO present Digital India, Surakshit India, powered by CNBC Awaaz. CNBC TV 18 and HDFC ERGO present Digital India, Surakshit India, powered by CNBC Awaaz.
Welcome back to this special show. CNBC TV 18 and HDFC ERGO present Digital India, Surakshit India, powered by CNBC Awaaz. We still have with us Mr. Ritesh Kumar, MD and CEO, HDFC ERGO General Insurance. Sir, I've been wanting to understand this from you. The company that is HDFC ERGO, you've sort of had a very good presence when it comes to the urban policyholder base. But at the same time, you've sort of kept your focus on the rural side as well. That is very important as a combination, and the rural side is more difficult in a country like India. Help us understand what has helped you in actually, establishing your roots on the rural side. Is it effective and deep-rooted distribution, or what is something that has worked for you in this particular aspect?
I think one thing to look at is that while any sector initially starts its growth from the urban cities, but the next level of growth will always come in from the smaller cities and from the semi-urban, from the semi-urban centers going into the rural sector. We've followed a hub and spoke model. So we've got 207 branches sort of across the country in about 191 odd cities, and I mean so that's our hubs. We also have about 429 city presences, which are one-man offices. I mean, we don't have a physical office there. I mean, this is a concept called an office in a bag kind of a thing, wherein we've got a person who operates out of a city, reports into the closest hub. I mean, once every 2 weeks, he or she comes into the hub. I mean, on a similar frequency, the branch manager of the sort of also comes into the city.
Correct.
And that's how we've actually been able to scale up our presence. As each of these locations have come up to scale, we set up our office. I mean, on the other side, I mean, going slightly sort of more rural, I mean, our two center pillars sort of from a rural India standpoint have been the Pradhan Mantri Fasal Bima Yojana. I mean, we've got about a 10% share sort of in that segment. And that's a very, very important segment if India is to move to the next level. And I mean, this is the vision sort of which is there, that I mean, how can crops be insured? Because I mean, given the fact that in case there is a calamity, it would cause a lot of hardship to the farmer community. The other channel which has been very, very prominent there is a channel called the Common Service Platform, which is basically the e-governance platform of the government of India, wherein it initially started with the whole thought process of having one e-kiosk for every 6 villages.
Correct.
And today they are literally at a ratio of 1:2, wherein there are about 3,000 kiosks. These are points which sort of take care of everything on a land records, birth records, death records, everything at a digital level. And we've had a fair amount of success distributing simple products sort of through this. And a third, which is going to happen shortly, is the entire concept of Bima Vaak
Correct.
Which our regulator is talking of today, and that by itself could be something which could be very, very interesting, because this is a concept wherein what is being spoken of is that we have a Bima Vahak in every sort of Gram Panchayat across the country.
Let's shift focus to digital. You and a lot of other companies have been traditional insurers, focusing more on offline business. What changed for you to become and take the leading seat when it comes to online insurance as well? Of course, pandemic became a reason for a lot of insurance companies. What else came along to really have this very strong focus on digital insurance?
As an industry, we service literally about 25 crore policies. And including crop insurance, we settle about 10 crore claims as an industry. Okay, we all know the huge geographical expanse which we have. Our average ticket size of a policy is about 8,000 rupees for the industry. The average ticket size of the claim is about 10,000.
10,000.
Okay. Now, given some of these numbers, digital for us is not a nice to talk about thing. It's literally part of the survival kit. And therefore, like some of the other financial services industry, we've had to take that path towards digital. Today, most of our servicing points, whether it is garages, whether it is hospitals, whether it is, our agents, they are all connected through our portals. Okay, we have API integrations with all our channel partners. And this is the reason why a lot of our policy issuances, why a lot of our servicing, why a lot of our claim servicing actually happens online. If I were to look at on a 24/7 basis, what is it that HDFC ERGO does every minute? Okay, we issue about 16 policies in a minute.
Okay.
We settle one motor claim in a minute. We settle one health claim in a minute. We settle 4 other claims. In this 1 minute, we've received about 16 things to our call centers or to our website from a servicing standpoint.
Correct.
We've got about 50 visitors to our website in this 1 minute. Okay, now that's the, and as you said, we were a 6.1% market share company.
Correct.
As of March, okay, today our market share may be 6.4. So that is the scale. And to me, I think the COVID really changed it all. And to me, COVID was a time when a lot of us had to sit home.
Correct.
When the lockdown was announced. But the fact of the matter was that this was the time when we needed to service our customers. Because
Absolutely.
hospitalizations were happening. And frankly, as an industry, we stood very, very tall on this. That we were able to service our customers. We have on COVID serviced about 100,000 customers, paying about 1,400 crores of claims. As an industry, about 25,000 crores of COVID claims have been paid. Okay, it is thanks to a lot of things at a digital level that we've been able to do. Today, about 93% of our overall policy account is what happens digitally. On the motor side, this number is actually 97%. About 2/3 of our customer servicing happens through a set of digital modes, 1/3 of which is actually through AI driven modes.
Correct.
So digital has actually helped us take things to the next level, service customers faster, service customers at the time of their choice.
With so much of data, how are you analyzing this scale of data? And how's your team, your actuarial team, using this data today to design products better, to price them better, to address claims better on all these 3 aspects?
We've actually used this data to build on a lot of things. So let me give you an example. We've looked at, say, all our past claims on motor, and we've now trained an AI engine wherein we are able to go out and get accuracy. So when our photographs come, our AI engine can say as to what is the extent of damage and what should be the amount of claim that can be paid.
Correct.
Now today, this goes in as a reference point to the surveyor, Tomorrow, as we are able to train the AI engine more, the AI itself will give the answer.
Correct.
Okay, we've got fraud engines basis the past analysis of data, which are actually able to point out which are the cases for investigation.
Correct.
Okay, so this is there. In motor, for instance, if somebody wants to insure their vehicle which is not insured, there is a concept of break-in inspection. This used to be a very, very tedious process years back, wherein we would actually send a person to the house. He would do a physical examination of the car,
Correct.
take photographs, then come back, submit a report. Classically, a process which would take anything between a day to 2 days. Today, all it takes is that somebody has to download our app, take photographs. It says that this is a Suzuki Model X. The Suzuki Model X will appear. It will actually point out as to where all you need to take the photographs of.
Correct.
These photographs come in, and in 55% of the cases, as in return, instantly we are able to say that yes, good to insure. The last one, product development, very, very important. Pricing, of course, it has always been an output of data.
Correct.
Whether you were able to analyze it in a sophisticated manner as you are able to do today or earlier. But this is also something which has helped us take things to the next level. Today, concepts like pay as you drive.
Correct.
While it is in its infancy in India, but if concepts like these were to sort of go to the next level, this would primarily be based on data.
You've completed 20 years of existence as far as the business is concerned. All eyes now are on the 25th year, which is when you celebrate your silver jubilee. What are your targets in terms of the premium that you would want to be collecting by that point, the customer base that you would be wanting to have, or the market share that you would want to show off as far as the industry share is concerned, or any other target that you'll have internally within the company on this front?
Our overall objective is that, of course, we want to grow at slightly higher than the industry growth rate, and all those numbers can happen. But our targets are really in terms of the fact that can I service the customer in half the time that I take to service him today? What percentage of customers can be serviced in an automatic mode? What percentage of the customers can be serviced in a one-click mode? If we have to take the industry to the next level, I think it's time that we start thinking in terms of some of these, and the rest will follow.
Well, thank you so much, Ritesh. The targets that you spoke about certainly are the least talked targets, but the most important ones for any insurance company for that matter. Thank you for sparing the time today to speak to us, to give your inputs, and thank you everyone for watching this special show from CNBC TV 18.
CNBC TV 18 and HDFC ERGO present Digital India, Surakshit India, powered by CNBC Awaaz. Focus. Ideate. Innovate. Enable.